Just about 3 p.m. here on Wall Street with an eye on Washington. We kick you off to the close as we go down to the White House. The President of the United States holding a, quote, Invest America roundtable with some very notable CEOs. Let's take a listen as to what the President has to say.
Rebuilding our military. We built it just 8 years ago. We started and did a great job, but now we have to rebuild it again, plus technology change. All of a sudden, it's about drone. You know, we have a new form of warfare. It's drone warfare. So a lot of things change. We did a great job with the military, but now we're going to have to do some little tweaks, to put it mildly. And we'll be doing that, and we have it all nicely funded. I look forward to signing this into law. It's really something that we're having such an opportunity. And I have to say, he's here with us. He's a person that I've admired for a long time. You take a look at what he's done and followed his record. And it's Dell chairman, Michael Dell. He's done such an incredible job. It's as a business person, I study business people, and that's a perfect one to study. It should be almost mandatory reading. So I want to congratulate you on that and thank you for the idea, because you're the first one that really brought this to my attention. I know that you and your friends have been talking about it for a long time, but other presidents didn't get it done, Michael, right? So we got it done. Congratulations.
Thank you very much. Sure. I want to also give some recognition to my friend Brad Gerstner, who helped get us all organized and
that's right.
And actually
thank you very much. Good, Brad.
Spearheaded this.
Good. And also we have with us a very powerful man in the world of business, CEO David Solomon of Goldman Sachs. David, thank you very much.
Thank you for having me here
friend.
today. Thank you.
Thank you very much. Uber CEO Dara Khosrowshahi. Where is Khosrowshahi?
Right here.
Where? Thank you very much. That's a hell of a name, but you've done a hell of a job. So that's appropriate. And also, again, Chairman Smith for doing such a job. Nobody knows taxes better than Chairman Smith. When we have a problem, Mike, we go to see Chairman Smith, right? So I want to thank you very much, Dara and Chairman Smith. I appreciate it. So I'd like to begin by asking Speaker Johnson to say a few words. And I think then we're going to go to Michael Dell, David Solomon. We're going to go to Dara and then to Chairman Smith. Thank you very much.
Mr. President, thank you so much for your bold, visionary leadership. It is the key to all of this great success that we are achieving. And the One Big Beautiful Bill, it is not an overstatement to say it will be one of the most consequential pieces of legislation in the history of Congress. There's a lot in here. And by extension, or I would say it is an extension of the figure who I believe will be the most consequential president of the modern era, if not all American history, and that's the gentleman sitting to my left. So I want to thank you for that.
Thank you very much. That's a beautiful statement. Huh?
Well,
I like him too.
Yeah.
Thank you.
It's a statement of objective fact, and every working American understands, I think, the principle behind this concept that we're discussing today. If you have a 401k, you understand the power of investing early for the future. Trump accounts take that same principle, and they apply it from the very beginning of Americans' lives. It's a pretty simple concept. The families that opt in will receive a one-time payment of $1,000 to a Trump account that parents can contribute to. It's a bold, transformative policy that gives every eligible American child a financial head start from day one. Republicans are proud to be the party, we always have been, that supports life and families and prosperity and opportunity. And Trump accounts are all about setting up the next generation for success. For future Americans, this early investment could really be the game changer. It could be a difference. It could pave the way for paying their way through college or buying their first home or starting a business, even when they're young. So even $1,000 at birth will put these Americans in a better position than over half of American adults who sadly have no retirement savings at all. So this would be a remedy to that great problem. And it will encourage the free market. It will encourage investment and understanding of capitalism. All these things that we want to foster among the American people so that the economy and individual lives can flourish. Of course, none of this happens unless we pass our One Big Beautiful Bill through Congress. And we have at stake the largest tax increase in American history if we fail to deliver. And we will not have this rocket fuel to the U.S. economy, and that's why this is so very important. Passing this pro-growth legislation will help every single American From Trump accounts, this is one of the components of it, to eliminating taxes on tips and overtime, to reducing red tape on Main Street. And the one big beautiful bill is going to drive prosperity. It's going to create jobs across the country. It will make all boats rise. Wages will go up. Job participation levels will go up. We'll have more opportunity, more economic opportunity for more people. So you can climb up that ladder to the next step. The typical family with 2 children is going to see their take-home pay increase by up to $13,300 a year. That's real money to real people. This legislation is geared for hardworking Americans, and it is going to help everybody. And we are excited to deliver it. It can't happen soon enough. We are very close now to that finish line. After about 14 months worth of work that's gone into this, we're excited that we're almost there. Mr. President, thanks again for your leadership, to all the great leaders around this table for all that they invest to our economy and our country and its government. And I will, as we say in the House, I'll yield back.
Thank you very much, Mike. I appreciate it. And again, for a great job. Thank you very much. Michael, please.
Thank you so much, Mr. President. I believe this is an incredible moment for all of us here today, and it's wonderful to be with some of the leaders of the most successful companies in the world as we come together to invest in the future of our country. We see the Invest America Act and the establishment of these Trump accounts as a simple yet powerful way to transform lives. Decades of research have shown that giving children a financial head start profoundly impacts their long-term success. With these accounts, children will be much more likely to graduate from college, to start a business, to buy a home, and achieve lifelong financial stability. Dell Technologies is proud to be one of the very first companies to support the Invest America Act, a bill that provides every child with a $1,000 seed investment account at birth. This is a straightforward step with enduring benefits. Following your inspiring lead, Mr. President, Dell Technologies will match the government's contributions, dollar for every child born to a Dell team member. This isn't just a new benefit. This is an investment in our people, their families, our communities, and America's future. And it embodies our core belief that opportunity should begin at birth. My wife, Susan, and I, also through our family foundation, have been closely studying the Invest America Act. And assuming that it becomes law, we expect to make a very significant gift. We view this initiative as a powerful platform for philanthropic innovation aimed at helping children thrive wherever they come from, particularly those families who have been historically left behind. Mr. President, you articulated it perfectly. These Invest America accounts will give every new American child a genuine opportunity to participate in history's greatest engine of economic growth, the American economy. The funds in these accounts invested in American enterprise and innovation will grow over time into substantial nest eggs, providing support for education, home ownership, and starting families. The ability of families, friends, benefactors, and employers to match the government's generosity amplifies the life-changing potential of this initiative. Thank you, Mr. President, for your visionary leadership on this critical issue. These Invest America accounts will profoundly impact countless young Americans, ensuring they truly benefit from what Abraham Lincoln described as the right of every American, the right to rise. Thank you.
Thank you very much, Michael. And we really have come a long way since you came to see me about 6 months ago with your beautiful wife. We had a nice talk. I said, that sounds pretty good. Let's think about that. And it's everybody I've spoken to about it, they can't even believe it. And because of great politicians and political leaders like we have, I think this is going to go quickly, very well and very quickly. So I appreciate it. Thank you very much. David Solomon, please.
Thank you, Mr. President. I'm thrilled to be here with everyone and excited to participate in this important and timely discussion. I'd also like to acknowledge the efforts of so many in Congress on this very significant issue, and in particular the members here, and particularly the leadership of Senator Cruz and Representative Moore, who have played a big role in helping drive this forward. We also wouldn't be here today without the leadership of Brad Gerstner and Michael Dell in really having the vision, the energy, the passion, the commitment to help move this forward. So thank you both. There are many reasons why the United States has the largest and most dynamic and most innovative economy in the world. But one of the most important is the fact that our system of democratic capitalism incentivizes a culture that does not penalize people for taking risks. In fact, it incentivizes people to have a vision to go out and attract funding that's necessary to make their vision a reality. It is no mistake that many of the most important and innovative companies in the world today started in a parent's garage or on a college campus or in any one of a number of unlikely places in the United States. One of my worries is that our current and future generations of young people don't fully appreciate and aren't as educated as well as they can be on markets and capitalism. And while capitalism is not perfect, it helps fuel the American dream. This initiative gets at the core of binding those future generations to the benefits and the potential of America's great companies and markets. Early childhood investments have far-reaching benefits, and Goldman Sachs is proud to support this initiative. This is an exciting opportunity for public-private partnership and for both communities and companies to invest in young people, the future of America. Once we see the Invest in America Act signed into law, Goldman Sachs would be excited to further support this Invest in America initiative. We believe passionately in our capital markets. They are an enormous competitive strength for the United States, and we know that our economy's future vitality is dependent on young people understanding the power of investing for the long term and sharing in the benefits of ideas that bring value to the lives of people around the world. Thank you, Mr. President, for helping drive this forward, and I look forward to continued partnership on this effort.
Thank you very much, David. Dara, please. Thank you.
Good afternoon, everyone. Thank you, Mr. President, for hosting us here today. It's an incredible honor to be here in a place that symbolizes the very opportunity that has defined my life. Thank you, Brad. Thank you, Michael, for your vision. We all strive to build something that lasts, and the Invest in America Act is a legacy that is going to last for generations. President Trump, thank you for your leadership. Your support is going to turn this powerful idea into a powerful reality for millions of young Americans. And I was 9 years old when I came to this country, and my family arrived in America having fled the Iranian Revolution. We had lost everything that we had built. But we gained something far more valuable here. We gained a chance to rebuild again. We had a close-knit family. We had access to world-class education, and we had the one thing that fuels every American dream, and that's hope. So what if we could bottle up that hope? What if we could give that same power of hope, real, tangible hope that comes from having a stake in your own future and a stake in the best companies in the world to every single child that's born in this country? That's the promise of the Invest America Act. It's not just an account. It's a launch pad. It puts the unstoppable engine of compounding to work for our kids, building a future for them from day one. This mission is personal to me, and it's core to us at Uber. Every day we see people using our platform to create opportunities for themselves, to save for a home, to pay for tuition, to build their own American dream one trip at a time. And that's why Uber is so proud to support this bill, which also
right now we are
listening
to Dara Khosrowshahi, the CEO of Uber, alongside their Speaker Mike Johnson in the middle, President Trump obviously on the right of your screen there. We also heard from David Solomon, the CEO of Goldman Sachs, as well as Michael Dell, founder of his namesake computer company, and Invest America Roundtable. The conversation right now around a proposal, a legislative proposal that would effectively set up investment accounts for every person born in the United States going forward. You can type live, go on your Bloomberg terminal to continue following that conversation. And as we get more details, we will bring it to you. But we are kicking you off to the close as we do every day around this time. Romaine Bostick alongside Alex Steele. And we start off, of course, with the big news of the day. And that is the Worldwide Developers Conference taking place out in Cupertino, California. Bloomberg's Ed Ludlow is there at Apple Park. Ed, tell us what we learned today.
Well, we didn't learn on the AI side what clearly the street wanted to learn, right? I think the stock's off its low, but literally as the keynote started, Craig Federighi, who's the software chief at Apple, basically said, we have nothing to say about Siri and Apple Intelligence right now, but there will be announcements later in the year. And there was a clear kind of sell the news kind of moment for the market. basically there has been an overhaul, a really deep rebrand of the operating systems across Apple's offering with something they called liquid glass. It's largely inspired by the early work they did on the Vision Pro operating system. And the logic is that by making everything more uniform across all the devices that Apple has, it's just more appealing. And it's kind of very much in line with the history of what WWDC is. It's a developers conference, but not sort of needle moving for the stock in any way because AI is everything at the moment.
Ed Ludlow there on the ground at Apple Park as we keep an eye on shares of Apple, down about 1.4% right now as most of these conferences go. Not always really a market-moving event, at least for those folks who are looking to see what the next big product is, but maybe it does set the tone for what those next big products might be. Ross Gerber joins us right now, co-founder, president, and CEO of Gerber Kawasaki Wealth and Investment Management. And Ross, I don't want to poo-poo this. At least if you're not a developer, this was a little bit of a snooze fest, if you will, here. We did get that update here on the liquid glass and obviously some whittling around the edges when it comes to improving the operating system. What did you make of the event?
I don't even understand why they have these as events when there's so little information actually given to people of any value, and there's actually no real big change that was announced in this event. The main thing that everybody cares about is our Apple devices are dumb. Siri is clueless and doesn't work. And here we are using apps on our Apple phone like Perplexity and OpenAI and others that are just doing wonderful things for us. And Apple isn't even at this party. So what we want to see is Apple taking aggressive steps to redo their entire operating system around AI versus these sort of incremental attempts at making Siri better, and we just didn't get that today, and it's really disappointing.
There's been a lot of reporting, both by Bloomberg as well as the Financial Times and the New York Times, about this idea that Apple did try that, but apparently one of the mistakes, in the words of those reports, was that they tried to basically build upon Siri rather than starting from scratch in the way that some of these other AI companies did. I don't quite understand all the technology behind that, but I am curious if maybe there is an argument to be made for them to just go back to the drawing board, start from scratch, or alternatively, just try to buy someone out.
Yeah, 100%. You can't fix bad technology by adding good technology to bad technology. In fact, what they have to do is start over. And there's many places they can start. One would be maybe just investing in companies like Perplexity and doing what Microsoft did early on, because Copilot has already been integrated into Microsoft systems. And I have to say, a lot of the stuff is really great. It's new, but it's great. And, I had Copilot write me a letter the other day, and it did a pretty good job of it. And so Apple's just so far behind, and with all the resources and the money they're spending on R&D. And the other thing that they need to be extremely concerned about is we all now kind of know the next big thing are glasses. I was testing the Meta glasses and I was super impressed. Like, they've come a long way with these Ray-Bans, and I would actually wear, I like Ray-Bans. And the glasses work really good. And Apple Vision Pro, which was really meant to be like a precursor to what's next, was really kind of a failure for a lot of reasons, mostly because it was just such a big, clunky thing, and they never developed anything good on it to watch. But as we move to the glasses, now we've got Johnny Ive working with OpenAI, and that's what they're working on, is glasses in my mind, and that's the future. So Apple's now falling further and further behind, and not only do they have a threat against the App Store, soon they're going to have a threat that's really going to possibly hurt their phone sales.
But at the same time, Ross, they still have 1 billion phones out there. So they still have 1 billion eyeballs, right? I mean, at some point, there will be something on AI that people like Romain and I will have to spend $5 a month in order to use. And that will be a significant amount of revenue then to Apple. And that is, in essence, the bull case. Do you not agree in that at all?
No, I don't, because I'm paying my $20 a month to Perplexity, and Apple gets its 30% cut, but I use Perplexity. That's what I use every day instead of Apple or Siri. And, it's almost laughable. So, yeah, they're getting $5 a month right now from Perplexity. So that's the way they're involved with AI. But what's going to happen is they just become a hardware company and a lot less of a software company, and the ecosystem's getting eroded over time. So I love Apple, and I have no plans of getting rid of my device per se. Mm-hmm. But the market pays for growth. It's like, where's the growth? And how are they going to sell more phones? And they haven't made a compelling case to do that.
Okay, so maybe we're not looking at the same kind of growth that we might have expected with a super cycle, but at 28 times, seems unreasonable?
Well, Apple's typically traded more like 20 times for a very, very long time. And for a long time, when Warren Buffett got involved, it was trading at 16 times. So I get that Apple has a higher multiple, and many of the big cap techs will have higher multiples because there are so few stocks in the stock market to even buy. But, Apple's fully valued. And once again, it's not growing at 25 or 20%, and it might not grow more than 10% annually. So, investors, and I'm a long-term Apple investor, and I love the company, but I'm not going to not be critical of the fact that they're falling behind and they have all the resources not to fall behind. We've seen them, whether I can go all the way back to the Apple TV that never happened, the Apple car that never happened. Yeah. They missed Netflix. They've missed so many things. It's time for them to invest. And Tim Cook is the most timid CEO in American history, and he's done a great job with what Steve Jobs left him, but he's way out of ideas now.
I'm glad you went there, because when Tim Cook took over, was that back in 2011 or whenever it was, there was a lot of discussion about this idea that he was a great manager, that he was the guy, he was a supply chain guy, he knew how to manage employees, but he was not kind of that visionary that we ascribed to Steve Jobs for, whether that was true or not. And the idea that here we are, more than a decade later, and there does not, and you may be correct me if I'm wrong, but is there that visionary somewhere by Tim Cook's side, and maybe do we need that person at the helm of this company?
Well, I think your point is really valid. In fact, if you're looking at where all the young, sort of visionary technology people are going, they're going to work at AI companies where there's opportunity and massive growth, and, they want to make money too. And so they're not attracting the talent to do this, and they're not building the kind of programs or acquiring the talent to do it either. They certainly have the capital to acquire any of these companies and get the talent in-house. But there's nobody sitting by Tim Cook that's that innovative or exciting, and they're all super comfortable, super wealthy, living this like ridiculous life. I mean, you could just tell by the presentation how out of touch they are with what consumers are actually doing. And somebody needs to shake up Apple, and that's why I'm saying it as a long-term. My entire lifetime I've owned Apple, and Steve Jobs would not be happy with these presentations. He would throw this stuff out and call it garbage. He was a tough guy to work for, and that is not what's happening with Tim Cook.
All right, well, Ross, different scenario 10 plus years later, but Ross Gerber, co-founder, president, and CEO of Gerber Kawasaki Wealth and Investment Management. We always appreciate that. Well, we continue our coverage of Apple's WWDC. Our next guest says that while he expects continued near-term concerns about tariffs, China, and demand to impact the tech giant, the iPhone install base is increasing, and growth drivers are continuing to expand. We're joined now by Daniel Flax, a senior research analyst at Neuberger Berman. So let's flip the other side. So you heard what Ross was saying, like wrong CEO, not aggressive enough, and too passive. Do you agree with that?
I view the story a little bit differently. What I see is a company that is continuing to empower developers to build, innovate, and develop businesses on top of their platform. We've seen Apple pay out over $300 billion to developers over the last nearly 2 decades. And so if the company is able to continuing empowering developers, I think the iPhone install base will continue to grow. I think the services business, now over $100 billion, will see strong growth. And that, in my view, will help propel the Apple story forward as we look into the back half of next year.
That certainly keeps people tethered to the Apple ecosystem. But to Ross's point, you do have new products being developed by Meta, whatever this mystery product with Sam Altman and Johnny Ive, and some other companies as well. So if they are able to come out with this next big new shiny thing, even if it doesn't necessarily have the full weight of the Apple developer ecosystem, could that potentially steal some of Apple's thunder?
It has the potential to take a little bit of share. If we think about the overall smartphone market and really the new device market, the smartphone market hasn't seen a whole lot of growth. What we have seen, though, is that customers in both the Apple ecosystem and the Android, they want more of the high-end, the premium devices, and that has helped Apple.
But are those devices going to be phones? Because that seems to be the debate right now, is that whatever's coming down the road is not necessarily going to be just this phone we're walking around with. It might be glasses, it might be a pin, or who knows what it could be.
A pin?
A pin.
Wow, okay. Is that what are you asking for that?
No, I'm just throwing them out there.
I'm just saying. All right, go ahead.
I think they're going to be more accessories. The question will be, in that environment with a plethora of devices, can Apple remain a platform that's relevant, and will the developers who are developing on iPhone go to the new devices? for the user, which is ultimately what consumers are going to care about. They're going to want to know that that platform can extend into many different areas. Healthcare is one example, in a private, secure way. So I expect competition, which has been fierce, to remain so from OpenAI, from others, from companies we haven't heard of yet.
Which, to be fair, I mean, we haven't had a ton of competition, for Apple. Like, you have your iPhone, you buy your iPad, and that's it, right? So competition could be a good thing. Is it worth 28 times earnings?
The way I look at valuation is this is a company that generates over $100 billion of free cash flow a year, and I think they can continue to grow that number. In the very near term, there's concerns rightfully about consumer demand, China, tariffs. What I think the market is going to look at over the next 6 to 9 months is what is the earnings power, the free cash flow generation coming out of what is a very difficult period. If it is stronger and you grow that 100 billion plus number, I think the valuation looks more reasonable in that context.
All right, Daniel, thanks a lot. Really appreciate Daniel Flax, Senior Research Analyst over at Neuberger Berman. And I guess that goes to the question, Romaine, as in how you value the company, right? Like, services where the margin is, that's where they want a lot of their business to be. But they're still a hardware company at the end of the day. But if you have 1 billion users, you can monetize that. And how quickly can you do that? They're not doing it right now with AI, but...
Yeah, we should point out it is a hardware company, too, with outsized exposure to China. Those Chinese trade talks, at least for day one, have apparently wrapped up. And we're now hearing from Scott Bessent, Howard Lutnick speaking to reporters in London, saying that the talks were, quote, fruitful.
Fruitful something, which then goes to the question.
That's better than what it was, I don't know, a few weeks ago when it was nothing.
Which then raises the overall question for the S&P. Do you need actual good news, so a deal that's not the UK that's signed in ink, or do you just need less bad news and fruitful conversations to then propel the S&P to a new record high?
Absolutely.
Well, we will discuss. All right, we're going to also continue our coverage of the Apple WWDC coverage with Tony Wang, a portfolio manager for the Science and Technology Fund at T. Rowe Price. If you don't like Apple, what do you do then in the Magnificent Seven space, as it's underperformed versus its peers since that low back in April? This is The Close on Bloomberg.
.30 p.m. here in a foggy New York City. This is the countdown to the close. I'm Romaine Boston.
And I'm Alex Steele. There's some kind of segue into foggy New York to the foggy markets because there's not that much happening. We are on the upside when it comes to the S&P by what? 1/10, 2/10, 3/10 of 1%. And volume is okay, but not great.
Yeah, we kind of came into this week and the whole question was sort of what's the next big catalyst. I know we get a CPI report on Wednesday, but nobody's really expecting any really market moving changes out of that. And then, of course, you have the Fed meeting next week. You got a bond auction on Thursday that could be interesting for that 30-year bond. But for the most part, this is a market kind of left to its own devices. And at least for right now, it's saying, I don't know how much further we need to go higher.
Right, which is also the whole point is like, what is that catalyst, especially as we're through earnings? Maybe Apple could have been one today, but not so much because Apple is now down by about 1.3%, but the broader tech market is actually holding up and doing all right. The Nasdaq 100 is up by 0.3%. Want to get more on this with Tony Wang, a portfolio manager for the Science and Technology Fund over at T. Rowe Price. Apple trading heavy off of a WWDC. What was your broad take?
Yeah, so what I'm looking for is really another S-curve adoption with AI with Apple. And so I think what I'm looking for Apple to do is really make sure that AI apps and like what we use in our life through our mobile phones is developed on Apple. And it's kind of like when I think about when you're texting somebody, that blue bubble versus the green bubble. Like, I want to see the AI apps run better on Apple's foundational models and better integrated in the ecosystem. I think what Apple doesn't want to have happen is essentially the AI apps being abstracted away from their iOS ecosystem like WeChat is in China, where, if you're switching phones, it's actually the friction's less because everything you do is within an app, like a super app. So I think that's what I'm looking for, is that make sure that Apple continues the ecosystem, developers develop on Apple's foundational models and perhaps also pull it together.
Do you have confidence that they're going to do it? We were talking to Ross Gerber earlier, who's like, it feels like Tim Cook's asleep at the wheel and not being aggressive and creative enough.
Well, I think, Apple has a lot of competitive advantages. There's a ton of innovation that can happen at the company. I think that when you're running such a large enterprise, things don't happen as quickly. But when you think about the captive audience that Apple has and their right to win, I think it's definitely there. And I wouldn't count Tim Cook and the team out there. I think they've done a really fabulous job over the last decade. And so I think it's their game to really be advantaged in. So, to me, like, they're still in a really good seat at the table.
Well, Tony, I am curious, too, just about where we're going right now when it comes to AI. And I'm talking more of the consumer-facing AI tools, because that's going to really determine what kind of devices we use, and more importantly, whether it's going to be Apple's world, whether it's going to be Meta's world, or somebody else's world. And I am curious as to where you see that going in terms of the use case, whether it's already here, and what the form and function will be of that.
Yeah, so I think that what we're seeing is that the transformation of like a generative AI model, which is like essentially having a smart librarian that you can go and consult with. You think about Google search is very much so like a librarian that has to go look up the answer and then as a result go provide a bunch of books for you to go read through. I think that's like a pretty big shift in technology. And so when I think about that you're going to have a lot of AI agents deployed. And so you're seeing the Mag 7 deploy that, with Meta, with its advertising, recommendation engines on top of that. And so to me, I think that's the big trend. And I think the form factor continues to be, I think largely through iPhone for now. When you think about the other form factors come out, there's been a lot of innovation, the Clip, VR, AR, but I think that you really need to see where consumers are really spending their time on, and that's accessible. And that distribution model needs to be super kind of ubiquitous. And so, to me, I think it's still the iPhone.
Tony, what other companies do you think are doing AI right? And I put that in quotes because we don't know what's right or not. But what companies are monetizing it correctly and providing it to users in a way that they can A, monetize, and B, that users can easily access?
Yeah, so in the portfolio that I run, I look for companies that are on the right side of AI, and I think that on the S curve of adoption, there's a few names that definitely come to mind. I think of the large cap ones like Meta, for example, you really see them driving significantly different returns on advertising, and you're seeing them distance themselves away from Snap and Pinterest and other platforms. And so at that scale, that's super impressive, and you can see them essentially, they recently launched their own kind of, you give them parameters you want, the returns you want, and they can essentially generate a lot of content and be really efficient at delivering those results. On the other kind of names that I think about, Palantir comes to mind in terms of being kind of your AI operating system, and that can connect a lot of your different data that would be otherwise siloed effectively. As you're seeing tremendous results in terms of, you're just seeing customers pay them a ton of money because they're getting a lot of kind of really great ROI on it. So, those are two names that come to mind.
When we talk about, and I'm glad you mentioned a new name, because I know every time we talk about AI, we kind of talk about I guess let's just call them now, the legacy players. It's basically the Metas and the Apples, Microsofts, and I guess Amazon to a certain extent as well. But you go back to kind of other iterations of technology, other iterations of the internet, et cetera. And the winners were always the ones, to a certain extent, that nobody was paying attention to. It was sort of that younger, smaller company that managed to be much more innovative than the larger established players. And that don't mean those players are going away. IBM's still around. A lot of the old legacy tech companies are still here and to a certain extent thriving. But I'm curious as to where you see the next sort of generation coming from. Do you have those names in your back pocket?
Yeah, absolutely. I mean, there's, I fill the portfolio up with about a dozen names that I think can be really innovative that are on the steep part of the S curve. So what comes to mind, I think that Robinhood, for example, they've built a really kind of almost AI first platform where they can be adopted, and they have their own AI infrastructure. They can iterate on their product, and I think that they're applying AI and to this next generation wealth transfer. And then another company that I think about is Axon. So they essentially are leaders in public safety. They're able to allow police officers to save a lot of time on paperwork through Draft One. And then I think about a few others in the portfolio that can definitely drive a lot of change. Duolingo, for example, when you look at their product development is really rapidly accelerating forward, because you can have generative AI create a lot of content, and A/B test it, and they're essentially like 100 times bigger than the next player. And so you see a lot of applications in different verticals, and I think that we're in this like new kind of technology cycle of AI that can be applied in these like kind of lesser known names as well.
All right, Tony, got to leave it there. Tony Wang, portfolio manager for the Science and Technology Fund over at T. Rowe Price. The Mag 7 as a group up for a second straight day, with the biggest gainers on the day being Tesla up about 4% and the biggest laggard being Apple down about 1.3%. We're going to take a look at another big mover on the day, and that is Warner Brothers Discovery, or, well, maybe just Warner Brothers. A big breakup ahead just a few years after they put this company together. It's our stock of the hour, and it's coming up next right here on The Close on Bloomberg. All right, let's take a look at shares of Warner Brothers Discovery. The shares are moving lower here on the day by about 4% after the TV giant said it was split into two separate companies, one cable and streaming, and a deal closing in mid-2026. It's not the only media giant cutting the cord. NBC Universal, Comcast should finish spinning off its cable segments by year-end. Let's bring in Chris Palmeri, team leader of media and entertainment over at Bloomberg Editorial. Warner Brothers Discovery. Let's talk about that here, Chris, because it was almost 4 years ago, 4 years ago in May of 2021, where they took Warner Media out from AT&T, combined it with Discovery. David Zaslav was in charge, and I was told that this was the next big thing. Why are we splitting these companies back into two again?
Well, they learned something since then. So the idea then was we're going to combine all these Discovery channels, the HGTV channels, with the Turner channels, CNN, TBS, and we're going to have this wonderful cable-like offering on streaming through HBO Max, and that was the thinking then. And what we've learned since is that the cable channels are sinking much faster than anybody anticipated, as everyone cancels cable. And the other thing is that people don't want to watch that content so much on streaming. As David Zaslav said on the call today, they're watching original TV shows, think of all the stuff on HBO, and movies, and only 25% of the programming is stuff from the old sort of cable universe.
But still, Chris, I mean, the traditional cable networks are where all the ad revenue still is in terms of how much they can charge for that. So it is like a cash cow in essence. Do all those cable companies join to be one big, not as horrible cable company?
Well, that's what some people think will happen, because you're right, that's where most of the profit's being made right now, but it's a shrinking profit. And so where those companies go, whether they combine together and try to build scale and find new sources of revenue, that's what a lot of people are thinking about in Hollywood.
I'm curious, though, too. I mean, what is the health of Hollywood, though, Chris? I mean, I understand, and my understanding, too, from the reporting is Zaslav, of course, is going to be the head of the new studio company. But what is kind of the future of that as well? Because it's not like they're just necessarily cash cows themselves either. I mean, I don't know what exactly they're filming in Hollywood these days, but it seems like that's a business going through transition as well.
It is. It's very much not certain. I mean, one of the reasons this is risky, and I think why the stock price is falling, is because, yes, they're putting a lot of the debt on the cable business, but then what does the future hold for the movie studios and the streaming company? They've set a target of a $3 billion profit, but that's still to come. And they've got to learn to make money in movies again, which is something everybody's been struggling with. And they've got to figure out what HBO Max becomes in the future. More, hopefully, than just a HBO Online.
So, Chris, do they need the cash cow that is the cable network? Like, how do they make up for the lack of that cash?
They've been cutting costs and, in the sort of movie business and TV production business, and reducing some of their output. So everyone's sort of focusing on quality, they say. And then on the streaming side, they've been raising prices and expanding and introducing advertising so they can create more revenue and make the streaming business more profitable.
Hey, Chris, really appreciate it. Thank you so much, Chris Palmeri, joining us from Bloomberg on that split. What's really interesting, too, is that if you take a lot of companies that aren't as great, like the cable companies, right? what happens? If you're not investing in them, do you just run off an asset? Is that what you're looking at?
Yeah, I don't want to read too much into it, but that kind of seems like maybe that's kind of the point, is that obviously they think that obviously the future is going to be on the studio and streaming side, and they're just going to lean into that and let the cable networks kind of, figure it out on their own.
Which, as Paul Sweeney, former media investment banker, said, that's great for bondholders, bad for equity holders.
Absolutely.
Like, that's the takeaway when it comes to the smaller
What
cable
about
companies.
viewers?
Viewers? I don't know. I don't know. I don't watch TV. Do you watch TV? Or you cut the cord?
I do. I love this show.
Well, this show I always watch, but this isn't. You can also get this on your smart TV, guys. All right, coming up, we're going to take it to the closing bell. 15 minutes away, Sinead Colton Grant is Chief Investment Officer at BNY Wealth. We'll take a look at a market that's kind of looking now for a catalyst. This is The Close on Bloomberg.
10 minutes until we get to the closing bell. Romaine Bostick alongside Alex Steele. Stocks off the highs of the day, but still holding in the green.
In the green. Also, the Russell 2000 was really outperforming today. I mean, at one point it was up by almost 1%. We're obviously off those highs as of now, but shocker, it is still tech, with the exception of Apple, that continues to outperform.
Yeah, one of the biggest gainers in the S&P is Tesla, up about 4.5% here on semiconductor, also at the top of the leaderboard as well. Take a look at yields, Alex Steele. You don't actually have it up there.
I don't.
You don't care about yields, do you?
Oh, I do, but into the close, I just do equities. Yields are for the top of the show.
Wait, have you been doing this every day for the last year that we've been working together?
Pretty much, yeah, a year and a half at this point or something. Anyway,
yes. I like your new hairstyle too, by the way. I've used that joke twice today.
It's true. He has. I think you need some new material.
I do. All right. Well, yields are down, if you do care, just by about 2 or 3 basis points across the curve. Let's bring Sinead Colton Grant into this conversation, Chief Investment Officer at BNY Wealth, as we count you down to the closing bells. And Sinead, I am curious about just how much conviction there is right now in equities, U.S. equities to be specific. I mean, we're kind of in the range of that reclaiming that all-time high, but not quite there. And this doesn't really seem like a market that at least has any hurry to push back to that 6,100 level.
So the key question for markets is the soft data now starting to improve? So we're starting to see slightly better consumer confidence data, slightly better business sentiment. And at the end of last week, we had pretty good payrolls numbers. Mm-hmm. So the market is not quite sure if this is what it should believe. If you think about the narrative that's been out there around all of the volatility, all of the surprises, all of the fluidity about what's happening in DC, and yet US companies are still doing pretty well. All told, we think earnings are going to expand by about 9% this year. So upper end of the range for us at this point is 6,400. That's a nice upside from here. So
yeah, that is a nice upside, but everybody's looking for something better. And I'm curious, particularly with the clients that you deal with, are they excited about the equity market right now?
Well, you raise a fascinating point, Romaine, because every year we survey our single family office clients. And one of the most startling points from this year's survey was the level of public equity exposure. Mm-hmm. So this is a survey of about 300 family offices, all who manage at a minimum several $100 million. The average public equity market allocation was 15%.
Wow.
What's the other 85%?
Well, so the big three, when you take them together, it's private markets, it's real estate, and it's public equities. So altogether, they account for about 55. But you're starting to see, there's clearly a fixed income allocation. You start to see crypto creeping in there, luxury assets. So it gets quite diverse quite quickly.
That's interesting. How do those clients or advisors, family office advisors, think about the recent volatility and the headlines that we get? Because I think about this a lot, that it could be cyclical, but some of these things can be structural, like higher long-term yields, for example, a dollar that can't really find its footing, and a rejiggering of 80% U.S. assets to maybe 60%, and then that 40% is overseas. How do you guys think about that?
Well, these are all very long-term investors. Right. And so what they want to focus on are what are the themes that are really going to impact their portfolio going forward. And of course, many of them are global investors, so they will have exposure across many different markets. But we ask them about the risks they're worried about. They're worried about inflation across the globe. They're worried about geopolitical risk. And what I should say is that the split of respondents is roughly 50% US, 50% non-US. But but they're also thinking about how do they engage the next generation of the family. And that's where we start to see some of the leading edge investments. So being earlier to look at things like sports investing as a potential inflation hedge, looking at crypto, for example. We see much greater uptake in the family office segment, where they're looking not just 2-3 years down the line, but really thinking 5-10 years down the line, and what's going to engage the next generation of investors in their families.
When you talk about those things, is that a growth story, meaning they're looking at that specifically from the amount of growth that they can get on that investment, or is that also kind of baked in this idea of an inflation hedge, of a economic downturn hedge, et cetera?
So it's a combination depending on the asset class that we look at. So, for example, luxury assets. So that could be anything from art through jewelry, watches, sports. Mm-hmm. That is a combination of the intrinsic value of the asset and an expectation of inflation hedging over time. When we think about crypto, interestingly, the reason that we're not hearing is an inflation hedge, but more that the prospects have improved, it's a good long-term investment, and also practically, we've seen a higher allocation to crypto among non-US investors than US investors, which has partly been because the regulatory environment has been more supportive outside the US until relatively recently.
Is there more of a focus outside the US right now? And particularly, I'm talking from US investors. Are they also looking much more outside the US?
Well, so we're certainly hearing that, right? I mean, you look at some of the index returns in the first half of the year, they've been very strong. But it's only for a couple of quarters, right? It's coming from a very low base when you look at the relative performance to the US in the in 2024. But here's the thing, and we should not forget this. We like the US. We think it's the right long-term investment option, because it ultimately comes back to the fundamentals. And one of the biggest fundamentals is productivity. Productivity growth in the US since 2010 has been over double what you've seen in Europe, for example. You've seen earnings growth that's been, in certain cases, 3 times in the US what you've seen in, for example, the Euro Stoxx 50. That, to us, indicates a much stronger long-term investment story. But of course, you can see short-term periods when one market may outperform the US.
Quickly, how do the family offices think about AI?
That is their number one investment theme looking out over the next few years. They tend to focus on more thematic investments. AI is an example, robotics, healthcare, biotech, but they see it as the future, not only as an investment approach, but also how AI can help them better run their family offices, better identify investment opportunities.
All right, Sinead, always a great conversation. Sinead Colton Grant is the Chief Investment Officer at BNY Wealth, helping us count you down to the closing bells. Those bells right now just about 3 minutes away. Modest gains here on the day, Alex Steele. But I guess if you're a glass half full kind of person, this is an extension of that rally. Obviously a very modest one, but a lot of people want to see the S&P hold above 6,000 and, of course, eventually crawl back above that 61.44 all-time high.
Yeah, and JP Morgan Market Intelligence is tactically bullish because of short squeezes and more money coming in that kind of missed the rally, which, to your point, the longer we stay over 6,000, does that just suck kind of more money in versus something actually fundamental that changed that propels us to a new high? And also, does it matter if we're at a new high? Then does it matter how we got there?
Doesn't matter how we got there. Tesla and Amazon leading the charge, at least in terms of their weights to the downside. Apple and Broadcom providing a bit of a drag. A full breakdown of all of today's market action starts with our global simulcast right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele, taking you through to that closing bell with a global simulcast. It starts right now. Scarlett Fu back in the TV studio. Carol Masser and Tim Stenovic, they're not in the radio booth. They're somewhere out in the wilds of, I don't know, where are you? Are you both in the same building?
San Francisco, look at the bridge.
San Francisco, you got a bridge. But are you together, or what's happening here? Anyway, welcome to our audience.
I got a bridge behind me. Carol's got a tower behind her. So, but we are just, this is the magic of TV, guys.
The magic
of steps away from me.
They're like right next to each other. They're like you and me right now.
We're right next
to
each other.
The magic of TV. No, we're in different rooms.
It's pretty amazing.
Don't get in my head. What do you make of I don't know which one of you wants to pick up here. What do you make of this rally, quote unquote?
It's not much of a rally. Like, you look at the S&P 500, I feel like as many names are up as are down. But if you're a member of the semiconductor world, you're doing pretty well. The SOX is up about 2%. And I think just nearly all of the names that are in that index, guys, are higher today. 29 of 30 names are actually showing some gains here.
I'm squarely focused on what's going on between the U.S. and China in London. We are reporting that trade talks are going to continue on Tuesday. The president just moments ago said we're doing well with China. China's not easy, but I'm only getting good reports.
Yeah, the fact that discussions are continuing into tomorrow is a good sign, and there haven't been any real negative headlines. The other story, of course, we're keeping an eye on is what's going on with Apple and the Worldwide Developers Conference. Not too far from where you and Carol are, Tim, but no real surprises out of that event today.
Yeah. A lot more style than substance, right?
There you go.
All right. As we get the closing bells here in New York, we'll get to some of the individual movers in a second. Apple closing out the day lower. The Dow Jones Industrial Average relatively unchanged on the day. It takes a while for these numbers to settle, but it looks like it's going to move lower by less than 10 points on the day. The S&P 500 higher by less than 10 points on the day, about 5 points higher than where it started, and that is a gain of about 0.1%. The Nasdaq up about 0.3% on the day. And let's take a look at the Russell 2000. A gain for the Russell 2000 of about 12 points, or about 0.6%.
All right, looking at the S&P 500, guys, as I mentioned earlier, kind of an even split. A few more names to the upside, Scarlett. 261 names in the S&P 500 actually gaining ground today, 239 to the downside.
All right, let's take a look at the IMAP, which looks at the 11 sectors in the S&P 500. Pretty even split there as well. 6 sectors in the red. The biggest laggards here are utilities and financials, each down about 0.5% to 0.6%. Staples also lower by 0.25%. And the outperformer of the day is consumer discretionary, really led by the auto-related stocks, up more than 1%. Materials and tech are also just finishing up in the green.
All right, guys, let's get to some of the individual gainers. I mentioned that semiconductors really outperforming as a whole and as a group today. What's interesting is there's a name we don't talk a lot about, ticker's ENTG, Integris. And we saw this one being the top gainer in the semiconductor index, $11.8 billion market cap. It's a semi-manufacturing company. And I was looking for some news like throughout the day and really didn't see anything specifically, although reader interest in social was unusually high, though the number of news stories about the company was no greater than average. So no notable news, but the stock was up about 4%. So I thought it was just kind of interesting to see that one being such an outperformer. Actually, it's up 7.6%, today. So quite an outperformer. Qualcomm, staying in the semi space, that one was up more than 4% in today's session. The chip maker reached an agreement to buy AlphaWave for about $2.4 billion. That was a cash deal. They are doing this to expand its technology for artificial intelligence. So again, an AI play. The deal will be subject to regulatory and shareholder approval. It is, though, is expected to close in the first quarter of 2026. AlphaWave's board unanimously recommending the cash offer, so they're already all in on this. And then Synchrony Financial, got to mention that one as well. Off its highs of the day, was up 4% at one point, but finishing with a 2.7% gain, so some outperformance there. This is as Walmart's credit cards will be issued by Synchrony Financial, with OnePay offering co-branded and private label cards in the U.S. later on this year. So nice little tie-up there.
They did. It was something about the way they do contracts, basically.
Oh, exciting.
Good talk.
Okay. All right, let's go to Apple. I've been watching shares of Apple all day as the company held its Worldwide Developers Conference in Cupertino. We spoke to Ed Ludlow there a little earlier. Shares were up as much as 1% earlier in the session, but ended up falling 1.2%. Perhaps investors learned more, or maybe they were left wanting more. The company is introducing Liquid Glass. This is a new Vision iOS-like design language across its different platforms. Not a surprise if you've been paying attention to what Mark Gurman has been writing for weeks at this point, and perhaps that's why it was kind of a sell the news event out of Cupertino. Also, the iPhone is getting a revamped phone and camera apps that focus on simplicity. Lots more news there. I encourage you to check out our live blog for more information about what was unveiled. Also, you know about merger Mondays or media Mondays. This is a media Monday, but it's more like a divorce when it comes to some traditional media. We're talking about Warner Brothers Discovery. Shares of Warner Brothers Discovery falling about 3% on the session today. This after the company said that it was separating into two different companies. It's the global networks business, so that'll include entertainment, sports, and dozens of cable TV brands such as CNN, TNT, and TBS. Then it will hold a 20% stake in the other company, that's the streaming and studios business. That'll be headed by David Zaslav, and it'll use proceeds from that entity as a way to cut debt, the company said in a statement earlier. Shares were up earlier in the session by as much as 13%, but ended up falling by about 3%. And finally, shares of Robinhood. Do you guys remember last week there was all this speculation about Robinhood being included in the S&P 500 as a result of the quarterly rebalancing? So you had companies like AppLovin as well surge. Robinhood surged last week 13%. And then look what happened Friday. The markets close, and then S&P indices, or Dow Jones Industries rather, come out and say, no, we're not actually changing it up at all. S&P Dow Jones Industries said we're leaving the S&P 500 the same. Robinhood fell by about 2% today as a result.
And Applied Digital down 6%. A lot of people thought they would make it in as well.
Yeah.
Ouch, ouch, all those rumors. All right, let's take a look at the bond market here, guys. So buying pretty much across the curve, that front end down by about 3 basis points. So today's not the big mover, but tomorrow you get the 3-year, then the 10-year Wednesday, and then you have 30-year on Thursday. All told, you're looking at $119 billion with the 30-year rate around an 18-year high, clearly off that level, but around that area. That's what many investors are going to be watching, guys.
All right, so let's get to something that's happening right now. For those who have recently graduated from college, it's not such a great job market, even if you've got good qualifications. And apparently a couple things are going on. In some cases, it's just companies like not looking to hire. And the other thing is AI is replacing some of the jobs that maybe normally went to college grads.
Yeah, Claire Ballantyne writing about this. So even a short period of unemployment can have long-term effects when it comes to a graduate's career. You could lose a potential of $22,000 over the next decade. So it's a really stressful time for those who are just starting their careers. There's a lot of disruption happening right now. It's kind of scary when you think about the job market that these new folks are entering. But I guess, I don't know. I mean, I guess the question is, oftentimes we do enter the job markets in periods of turmoil. I mean, I think a lot of folks remember entering the job market during the Great Recession.
But is this supposed to be
recovery
worse?
there?
I saw some of the data that it's something like about 85% of basically the increase that we've seen on the unemployment rate. That's largely, Scarlett, because of new entrants.
Right, like college graduates, for instance. And of course, the class of 2025, when they are applying to college, the big thing was to be a computer engineering major. And those are the jobs, that's the major where they're having a really, really hard time finding jobs because entry-level jobs in that field just isn't opening up. And a lot of that is because of AI. And like Carol said, companies holding off until they get more clarity.
Now, if you do get a job and you're asked to go into the office, you actually may not have a desk.
What?
And that is the topic of our next discussion here. So you know how banks...
Nice segue.
Thank you. Bank executives are pushing for return to office work, right? But banks are now facing apparently a shortage of desks, particularly in London because of the real estate squeeze.
I love this story. And it's not just banks in London, it's banks here. We had the same issue with the federal government here in the United States when the Trump administration asked all these people to come back.
And there wasn't enough toilet paper.
Yeah, and there weren't enough desks. I mean, so it's like, come on, guys, infrastructure, get up.
Can you imagine having to hot desk all the time? You know, a lot of people have to bring everything with them, their laptop, their shoes, their books with them, whatever, if they need to consult any books because they're not digital. But like you're bringing a little rolly suitcase with you every time you go into the office.
You couldn't do that because if you've seen your desk, you and I could not do that because our desks
let's
are
not
hot
talk about our
messes.
desks. Yeah.
But if you look at, say, Kayla, like our booker, like she's good to go. Like she can just go to different desks.
Who has the cleanest desk of
well, I know it's not us.
100% it's not me, Carol, or
That's
Scarlett. The
for
three
sure.
of us are out. I think it's just a Tim versus Romaine situation.
I think Tim probably has a beat, right?
I don't know.
Did you guys? I got some bad news a little earlier today. Carol and I are flying to San Diego tonight
That's bad
for a
news?
conference.
Okay.
You know, the bad news is we're sitting next to each other.
Oh, wow.
And Carol has this policy. She does not sit next to me on an airplane. She refuses to do it.
Interesting.
Some reason.
Is it just him or is it like a co-anchor?
No, it's actually everyone. Don't you need your space on the plane?
That makes
Ask
sense.
all of my colleagues. I'm just like, I love you, but when I'm on a plane.
Can I just say, a couple months ago, I ended up sitting next to Michael McKee, our Bloomberg International economics correspondent, and kudos to Mike. He did not say a word to me. I did not say a word to him. We said our hellos, and then we just ignored each other. And I really appreciate you for that, man. I love you.
Well, apparently it's a thing.
That's my version of it.
That is
all right.
hysterical.
All right, guys. That's a wrap. Our cross-platform coverage, coast-to-coast coverage.
So that's why
in fact,
still out there. What is this? It's like our new West Coast down here.
I might change my flight. Let Carol go by herself. That's what we're going to do.
I might walk to San Diego. All right, guys, we will see you again on Wednesday.
Maybe. And our coverage continues here on Bloomberg Television. A closer look at what's going on in the world of politics, a closer look at what's going on in the world of tech on the heels of Apple's Worldwide Developers Conference. A conversation in just a second with Angelo Zino over at CFRA. Stick with us. This is The Close on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. This is a market that's really been in search of some type of catalyst to move it higher. Remember, the S&P did close above that 6,000 level last week. It did hold it today, but you can see the gains are fractional, to say the least. Of course, 6144 and change. That is the all-time high for the S&P, and a lot of folks trying to figure out what actually gets us there. Is it Apple's WWDC? Is it, I don't know, the economic data? Is it maybe a pause in some of the trade issues? One of the biggest gainers, at least on a sector basis, on the day was the Philadelphia Semiconductor Index, up about 2% on the day. But take a look at the third line on your screen. This is a Russell 2000 Aerospace Index, a 4% gain on the day, and that's largely because of some interesting new entrants into, I guess we'll call this the air mobility space.
Yes, I know. I can't believe that there's now an air mobility sector, but among the names you should know are Archer and Joby. You could see both those stocks gaining by double-digit percentages, extending gains from Friday when the president signed an executive order for U.S. development, commercialization, as well as export of drones. So that's giving those stocks a bit of a lift here. We're also keeping an eye on Robinhood and AppLovin. Both stocks had rallied on speculation that S&P Dow Jones indices would add the companies to the S&P 500. But of course, Friday after the market closed, the index compiler ended up making no change during its quarterly rebalancing. So perhaps better luck next quarter. All right, our top story this hour. Apple is doubling down on design. The iPhone maker is holding its annual developers conference in Cupertino, California, and announced a refreshed user interface that will work across its lineup of devices and also opened up its AI models to outside developers. But Apple did not announce any noticeable AI advancements that could prompt a wave of upgrades. So this lack of surprises sent shares of Apple down as much as 1.9%, bringing the losses this year to almost 20%. Apple trailing the broader market and all of the Mag 7 names except for Tesla. Romaine?
Angelo Zino joins us right now, Senior Vice President and Equity Analyst at CFRA Research. And Angelo, we had a chance to listen to the Worldwide Developers Conference presentation. And normally these aren't major market moving events, but I think the market really was looking for much more of an articulation of what the AI strategy is going to be. I am curious if that matters to you as an analyst of this stock.
You know, Romaine, I think it matters. Clearly, when you think about what we just saw here over the last couple of weeks in terms of developer conferences across the ecosystem, the AI ecosystem, I'm thinking most recently maybe Alphabet, and you kind of just see some of the great innovation that they're doing and what they're coming out with, and just look at where the world is going here over the next couple of years, and it is going to be more AI-centric in nature, right? And as we kind of move towards that, type of stratosphere, you're likely gonna gravitate to those type of names. On Apple's side of things, they're a completely different company in the sense that we view them as more of a distributor of AI, and not necessarily one that needs to be in the middle of AI innovation, but they still need to innovate, right? And they still need to kind of be out there at some point in time. And I think that if you're an investor, you need to be patient right now. They're going to get this stuff right. The big thing right now is kind of the Siri integration across the app ecosystem, and that's on hold right now to 2026 in our view. They did acknowledge the delays, at the top of the event, which we think is a good thing. But nonetheless, I mean, this is one of those things where, as an analyst, you have to care about it. You need to see what they're doing, but it's very frustrating.
Well, that's what I'm curious about. I think it's interesting you use that phrase as a distributor, and I understand that. I understand to a certain extent that's their power. This is still a company, $60+ billion in cash, $400+ billion in revenue. But what happens if the hardware side, with regards to AI, if the hardware side of this equation moves away from phones and away from tablets and to wearables and other things that we know Meta and OpenAI and others are working on. Is Apple at risk of being left behind?
I don't think they're risk of being left behind, but there's definitely risk out there of the environment getting a lot more competitive for them, right? I mean, right now, when you look at the U.S. Market here for smartphones, it is really a two-horse race in the sense of Apple versus Samsung in many respects, or Apple versus Google if you're looking at iOS versus Android. When you kind of start seeing the future of AI here, if they don't get the hardware side right, clearly there are going to be other issues out there. But, we continue to tell investors out there, and just knowing the consumer from what we've known over the years, the consumer is very loyal to Apple. And Apple has by far the most, the most important, valuable ecosystem out there, and among the highest retention rates out there. So we think they're going to get this right. They've shown some glimpses here over the last 18 to 24 months, but they keep things tight to the vest, so you never really know from them relative to some of the competition out there.
Yeah, well, Apple's user base is either loyal or lazy, because it'd be really difficult and there'll be a lot of friction if you tried to switch to anything else. 2 years ago at WWDC, Apple unveiled the Vision Pro. And we know that it hasn't been a spectacular debut. It's not really moving in numbers that are meaningful. But is there a way where they're integrating that Vision Pro device more with the AI offerings eventually that could give it a second lease on life?
Yeah, I mean, I think so. I mean, you kind of look just at the liquid glass operating system here. It is kind of, it comes off that Vision operating system in nature, right? So you're kind of getting glimpses of some of that. As we look to the future here and kind of the next evolution of devices, we do see the potential for them to eventually roll out smart glasses. Hopefully it is by the end of next year, when they also potentially roll out, a foldable device at some point. So, I think there's kind of better times ahead. But maybe to your point, yeah, I mean, we're starting to see signs of that here, whether it be with this operating system that we saw rolling out or will roll out later this year, or whether it be, potentially new, stuff on the hardware side of things. Again, hopefully starting late next year and into 2027. But again, that's, 12, 18 months at least down the road.
All right, good stuff. Angelo, always appreciate your joining us. Angelo Zino is Senior VP and Equity Analyst with CFRA Research. And of course, the other elephant in the room, of course, Romain, is the fact that Johnny Ive, formerly of Apple, has gone over to OpenAI and is working with them on some new devices.
Well, that's what I'm really curious to see, what the next generation of devices is going to be. And if you believe all the sort of, tech bros out there, they say it's not going to be, a handheld phone, that we're so used to, that it is going to be something new, whether it's glasses, whether it's a pen or something. Who knows? But the question is, where's Apple's role in that?
Yeah, well, maybe it pays to wait and see what shakes out.
All right, we're going to talk a little bit more about that later this hour. We're also going to talk a little bit about local politics. Of course, a big mayoral election here in New York City, and some big decisions for mayors in other cities as well. I had a chance to sit down with the mayors of Cleveland, Ohio, and Durham, North Carolina, to talk about how they're attracting investment to their cities. That's coming up next here on The Close. This is Bloomberg.
You elect a socialist who tries to give everything away free, doubles the taxes on the wealthy, and the wealthy say, that's it, I'm gone.
And that is former New York Governor Andrew Cuomo, who is now the front runner in New York City's Democratic mayoral primary. He was speaking with Tom Keene on Bloomberg Radio earlier today. He was asked a big question here about some of the far-left progressive policies that are, I guess, apparent in New York City as well as other cities, and whether it has the potential to drive residents out of states like New York and into places like Florida and Texas. Now, I had a chance just a little while ago, last Friday, to catch up with the mayors of Cleveland, Ohio, and Durham, North Carolina, and I posed a similar question to them, not only about the potential to drive folks out of the city, but more importantly, how do you attract new businesses into the city? How do you balance progressive policies with more business-friendly policies? And here's what they had to say.
For far too long, Cleveland was a very insular city. And we historically don't like newcomers coming into our community. But for us to grow and be competitive, we have to get on that plane and pitch our city to the world. And that's one of the things I did when I first took office. But this is personal for me. When my late grandmother passed away several years ago, she migrated up to Cleveland from Jasper, Alabama, bought her house on East 121st Street in Dove in Cleveland Southeast Side. And when she bought that house with her late husband, who worked at GM, it was supposed to be a legacy wealth opportunity for our family. It was supposed to be that. But the Great Recession happened, and the housing values have not recovered in that part of the city since 2008. And intentionally, we as a city didn't put proactive measures in place to make that part of Cleveland grow like we've seen in downtown and the West Side. And so for us to truly close the racial wealth gap in cities like Cleveland and Durham, we have to be intentional of promoting investment. You know, this word I hate, gentrification, it's a terrible word because it means so many different things to so many different people. I want that new coffee shop coming to the block. I want affordable and market rate coming to the block. We have to be more focused on building mixed income communities, but also put in place tools like a housing trust so neighborhoods and residents get their fair share of the wealth gains that can accrue with these types of targeted investments.
A big part of doing that, of course, is through public and private partnerships. And actually, one of your former mayors and one of your predecessors, of course, effectively wrote the book on that, Ivanovich. I am curious about the importance of public-private partnerships, how you court two sort of opposite sides of the spectrum that sometimes are at odds with each other.
Yeah, so we are, that's going to probably be my legacy. Durham was a vibrant community, and then it went through its downward years. Now we're on the come up again. We are home of the Research Triangle Park, so everyone in Silicon Valley is now coming over to Durham, and they're dropping their businesses right there. And so
there's a lot of New Yorkers going down there as well too.
Say again?
There's a lot of New Yorkers going down there too.
So our number one transplant are New Yorkers.
And you love them, right?
We welcome you. Come on, bring it. Thanks for your tax dollars.
Come to Cleveland too.
But those companies are coming there, but they're also bringing jobs, and I'm just being very intentional about it. Durham now is the third largest city in North Carolina with the smallest convention center, but convention centers as a model doesn't work on its own anymore.
Really?
So we're looking at an innovation center now, and I'm doing that with identifying private landowners and then conceptualizing what is possible there.
Well, I'm curious about that too, because I know there's been a lot of talk that your convention center is, in the minds of some people, too small. Obviously, the revitalization of Cleveland, at least going back into the 80s and 90s, a lot of that did revolve around building convention centers and trying to bring businesses for conference. Why doesn't that work anymore?
So, convention centers that are standalone, when they're not occupied, it is dead. And as a restaurateur, the worst thing you can want to do is have an empty restaurant and there's no one coming. But there's an opportunity. We don't have a grocery store in the heart of our city, and so we're looking at this innovation center where it's going to be an HQ hotel, conference center, grocery store, retail, but also that innovation center where Dell, NVIDIA, ARM, Google, Apple, Eli Lilly, all of these companies that are now have a significant footprint in Durham also are going to have a footprint in this space.
And that was Justin Bibb, the mayor of Cleveland, Ohio. The person speaking there at the end was Leo Williams, mayor of Durham, North Carolina. A great conversation. It really gets to this idea, Scarlett, of how you kind of balance cities. These are, of course, democratic cities. They have huge progressives on the city councils, but at the same time, they're trying to create business-friendly policies that attracts investment and attracts new companies.
Yeah, they have their work cut out for them. And what I noticed, of course, is just how young both those men are.
Yes, in the 30s. And I guess that's a good thing, right, compared to some of the folks in our federal government.
Yeah, 70s, 80s.
Yeah, little ripe.
That's one way of putting it. All right, we're going to move on here and talk about how there are no signs of relief in Los Angeles as protests extend into their fourth day. Greg Valliere of AGF Investments will be joining us next. This is Bloomberg.
All right, a fourth day of unrest in the city of Los Angeles. Protesters upset about some of the tactics that ICE agents have taken in order to enforce immigration laws. We learned just a little while ago that President Trump has sent at least 500 U.S. Marines to help in the response. Trump also at the White House was asked about California Governor Gavin Newsom and said that he wouldn't necessarily be opposed to arresting the governor for how he's handled the unrest. Alicia Caldwell is in our Los Angeles bureau. She's an immigration reporter for us here at Bloomberg News. Alicia, let's start first with the deployment of these 500 U.S. Marines, which is somewhat unusual given the laws we have in this nation. You have the LAPD, which was first involved in dealing with these protests. The National Guard was called in, which effectively should have been under the state's control, but that was called in by the federal government. And now U.S. Marines have been sent there on the ground. Are they already there?
They're not here yet, as far as we know. There are several hundred National Guard troops, and the Marines are en route. But when you say it's a little unusual, it's very unusual. Active duty deployment is, as far as I know, unprecedented. We've seen National Guard deployed in the past. We've seen the National Guard deployed by states, of course, as recently as the January wildfires here in Los Angeles. But what's different now is the federalization, and now active duty Marines headed to the region.
Alicia, give us a little bit of the backstory here of these protests or these demonstrations. We're now into the fourth day, but where did they begin and what was the impetus behind it?
So this started after workplace raids in Los Angeles in downtown. There were 4 search warrants served at businesses downtown. Separately, at least one Home Depot parking lot was sort of raided, if you will, by immigration authorities. And people started to protest and sort of come out in the community in those instances. This followed Saturday with another Home Depot arrest in a suburban community, a largely Latino Hispanic community here in the Los Angeles area. And it has grown since then. Arrests continue around the region and protests continue. Right now, video footage I've seen of a downtown park appears rather sedate. Large groups of people, several hundred, if not thousands of people in downtown Los Angeles. But what we've seen is over the course of days, things escalate during the day, and by evening things become quite violent. We saw overnight some looting and extraordinary levels of violence in terms of cars being set on fire, debris being thrown at police, and so on. There's been scuffles with the National Guard as well as LAPD. The Sheriff's Office is now involved, along with other local agencies.
I am curious, Alicia, and we are looking at, I believe, at live footage right now of a certain section of Los Angeles, folks just standing around. Of course, we're sort of wrapped by the images over last night and over the weekend with those cars set on fire and other images. I am curious about who these people are. Are these people out there? Are they the actual protesters, or are these, as you say, people who've just come out to loot and take advantage of the situation?
It's been a broad mix. During the day, it's demonstrators challenging ICE enforcement operations. As the days progress, as the evening comes into play, those protests or those demonstrations turn. They become much different events. Last night, people were pushed onto a local freeway or went onto a local freeway, and there were dozens of arrests. And that's where the real violence starts taking place, right? So we're seeing concrete being thrown at police officers and fireworks going off. And, earlier in the day, as I said, there was a scuffle between protesters and National Guard's troops. Tear gas and other non-lethal munitions were fired. And again, it starts relatively small, relatively peaceful, and then through the course of the day, we've seen things expand. And that's where you're seeing the violence. According to the local police chief, that violence is, in his words, disgusting, and it's been escalating over each day.
All right, Alicia Caldwell, thank you so much. Alicia Caldwell, our immigration reporter based in our LA bureau. For more on this and, of course, the ongoing U.S.-China trade talks that are taking place and will be extended into tomorrow in London, I want to bring in Greg Valliere. Greg is Chief U.S. Policy Strategist at AGF Investments. And, Greg, let's start with what's happening in Los Angeles. This unsolicited mobilization of 500 Marines to the city of L.A. What kind of signal does that send to the city, as well as other cities where there might be workplace raids that inspired protests? And at the same time, what's the signal being sent to the president's base?
Well, I tell you, Scarlett, it pains me to say that I think Trump welcomed this. I think he provoked it. Now he has hinted that he may have troops go to other cities. Could there be trouble in Chicago or Atlanta or New York? So I think this is playing with fire, quite frankly, and I do worry that it could spread.
Is this something that will end up being decided by the courts, as with most controversial actions that the administration has taken thus far?
Yeah, that's a likely outcome. And you have to say, for all of Trump's flaws, if you don't like him, for all of his flaws, he is brilliant at delaying in the courts, dragging things out, letting this go on and on and on. So I fear that this crisis is not going to end anytime soon.
I am curious about the response by the California governor. We've heard from Gavin Newsom on a few occasions, and we just had the news, Trump making comments at the White House when prompted with a question that he would actually be open to effectively arresting the governor, Gavin Newsom. I am curious about Gavin Newsom's own political ambitions, because there's been a lot of talk about him potentially maybe even running for president, trying to challenge Trump. I know there was talk that he wanted to run in the last election, but obviously he was crowded out by Biden and Harris.
Well, I thought for the last few months that he would not run. Whenever he was asked, he seemed to reject the possibility. But in the last 48 hours, he's been angry. I think he knows that Trump tried to provoke him. The Trump base tried to provoke him. And I think deep down in, Gavin Newsom is thinking maybe he's got to run.
What exactly is sort of the political climate right now? And I don't mean just in Los Angeles, but we talk about how the optics of a lot of what Trump has been doing, your perception of that will vary pretty widely depending on where you live in this country, what community you're in, not just necessarily Democrat versus Republican, but even geographically. And I'm curious that as we move forward deeper into this year, when we look at trade policies, immigration policies, budget policies, et cetera, whether we are looking at this holistically enough to understand what's exactly happening.
Well, to add to that laundry list you just mentioned, there's Ukraine, of course, there's the Mideast, there's food inflation. The public is anxious about the Fed and inflation. So I do think that this is not just one or two issues. You're right, it's holistic. And maybe this will be the Democrats' wake-up call, that they've been extraordinarily inept and docile. I think that may change.
Well, we'll see. You mentioned that investors are anxious about the Federal Reserve, about inflation, of course, about government spending as well. We have a lot of bond auctions this week, notably a 30-year bond auction. And, of course, that big, beautiful bill still making its way through the Senate. Where do you see the prospects for that bill? Are they going to be able to get it done by that July 4th timeline that they're hoping for?
Unlikely, Scarlett. I do think we'll get the bill, but it could be in the fall. There are so many controversial issues, the size of the deficit, the SALT tax break, and that I think in Medicaid. So I think it's possible this could drag on. But I do think that they all realize on Capitol Hill, if they don't do anything, we have a huge problem with the debt ceiling. And I don't think anybody wants to mess with that.
And Greg, before we let you go, we got to get your thoughts here as well on the trade talks between the U.S. and China, scheduled to extend to a second day in London tomorrow. And, we kind of got hints of what we should expect from Kevin Hassett when he spoke with media earlier today. What is the room for surprise, a positive surprise out of this?
Yeah, I think there is a chance. At the very least, I think they could break up tomorrow saying that they're going to talk more. I think they can schedule more negotiations. There's a window here, and it's not out of the question that we could see some progress.
All right, Gregory Valliere over at AGF Investments. We thank him for his time. And we should point out, Scarlett, we heard from Besson and Lutnick coming out of that first day of meetings in London. Fruitful, I think, was the word that they used. And, of course, the second day of meetings now on tap, which is, look, we can, make fun of it all, but this is a long way from where we were even just, 3 or 4 weeks ago.
No, very well said. Yeah. And if you look at the markets, of course, we did get a little bit of a lift earlier, and we kind of faded into the close, but still finishing slightly higher on the day, really within spitting distance of that record high, about 2.4% shy of that.
And I wonder if it is going to be trade that sort of unlocks that next leg in the rally. The idea that if you start to see some meaningful progress toward a deal with the second largest economy, with Mexico, Canada, European Union, is that what's been holding back the market, or is it something else? Is it the budget? Is it some of these other things?
Yeah, well, we're going to get dribs and drabs of headlines, and that'll go a long way towards helping us figure out what is the the appetite for people going in right now when there's still so much uncertainty. I mentioned how there's going to be a big bond auction on Thursday, a $22 billion sale of 30-year bonds. That will be a big test of investor demand. You could see the 30-year yield coming down about 2 basis points.
All right, we'll be back in a moment. This is The Close on Bloomberg.
It's time now for the top 3, where we name drop the people driving some of the day's most talked about stories. And first up is Ken Mullis, the 66-year-old dealmaker stepping down as CEO of his boutique investment bank, effective on October 1st. Mullis is passing on the reins to his co-president, Naveed Mahmoodzadegan, who helped found the firm with Mullis and Jeff Raish. So finally stepping down.
Yeah, finally stepping down. I guess on one hand, I was surprised. On the other hand, I really wasn't. I mean, I feel like he's kind of been handing over a little bit more control over the last couple of years. So, I mean, you look at what he built, and more importantly, just, he pioneered just a lot of strategies when it came to investment banking. So, potentially, I guess, the end of an era here. I'm sure he'll still be involved in some way or another.
He will remain executive chairman. So, he's not going too far.
All right. I'm taking a look at the CEO of Duolingo, Louis Van On. This is, of course, the language learning app, and he's facing some backlash frequently for some recent comments, multiple comments that he's made about being an AI first company. He's basically he's giving this interview and he's saying, look, I think a lot of people are taking what I'm saying out of context. We're not getting rid of all our employees. We're just saying, look, AI is the future. Obviously, with the type of app that they have and the type of learning and the way that learning is sort of mapped out, I mean, AI is sort of a natural fit for that. And he's saying, look, why wouldn't we look internally at our own uses of it and maybe find a way to be more productive? But of course, it's led to a lot of people saying, look, we don't want this.
I think bottom line, a lot of people just don't trust CEOs when they say, no, we're just going to free people up to do more creative and strategic work. When
AI will work alongside you.
But they're convinced that, because AI is much cheaper than people.
Yeah, and maybe he's saying the quiet part out loud. And also, it's this idea, too, of we look at AI in these extremes. It's either going to save us all or it's going to kill us all. And I think what he's trying to do, in a very inarticulate way, by the way, is say that there is a middle ground here, and maybe we need to explore that.
We need to be nuanced about AI? What?
Nuance? Who knows?
All right, finally, the third person we're watching is Misty Copeland, the ballerina retiring from the American Ballet Theater after 25 years there. She was, of course, the first black female principal dancer of the company. She will give a farewell performance this fall. Which, by the way, I was very eager to see, and then I realized the minimum ticket price is $5,000. So
I won't be going that unless somebody comes to me. But this is, I have to just say, she is big in our household. My wife is a former ballet dancer. Misty Copeland brought a lot of people of color, a lot of diverse people into ballet. I don't mean just on stage, but just into the audience.
Absolutely.
I remember, I've gone to ballet my whole life, and you were talking about predominantly, overwhelmingly white audiences, overwhelmingly older audiences. The first Misty Copeland performance I went to at Lincoln Center some years back, I was absolutely flabbergasted at just how diverse the audience was. She had a huge impact, and I'm sure she's still going to be involved in the world of ballet. But of course, at 42, and she hasn't performed really for about 5 years. At 42, obviously, your body
and she has other things she's working on now, right? Her foundation, for one.
Yeah, and we should point out the ABT has a great lineup now, a new principal dancer, and some really exciting young folks coming up here. But she certainly will be missed.
You're a ballet aficionado.
I wouldn't call it aficionado, but certainly a fan. And a fan of hers as well. So she'll be gone. All right, that does it for our top 3 here. We're going to set you up for what to watch over the next 24 hours when we come back, including a big look at some of the economic data coming up over the next week. This is Bloomberg. All right, we've got a couple of big economic data points here in the U.S. coming out this week. That includes the Consumer Price Index on Wednesday, which is expected to inch higher on a year-over-year basis. We get producer prices, basically wholesale inflation, the next day, and later in the week, we also get a read on consumer sentiment with the latest update on the University of Michigan sentiment data. Here to break it all down for us is Pooja Sriram. She's the Vice President of U.S. Economics Research over at Barclays. And Pooja, I do want to start off with the inflation data. I know we're not expected to see a huge jump, particularly from the impact of tariffs. We might have to wait maybe a couple of more months before we see that. But I am curious if there's anything we can extrapolate out of these numbers on Wednesday about where inflation is and, more importantly, where it might go.
Yeah, sure. Great questions, all of this, and something that we've been asking ourselves as well. So, starting with the data that we see this week, you're right. We don't expect to see a very big impact from tariffs on retail prices. But we do think some early signs could be visible. And in doing that, we're primarily looking at the core goods, so goods excluding energy and food. This is the basket of commodities that we're looking at when it comes to, trying to pass through for tariff effects. And if we see a fairly broad-based uptick there, maybe that could be a sign that price pressures are starting to seep through. In terms of what it means for, I would say, underlying price pressures, one thing that the Fed has tended to look at is the core services, excluding shelter. So that's a component that is more reflective of the underlying trends in the labor market, wage pressures, etc. And so maybe that's a category that's also, on our radar, and we'll be watching for that.
I am curious as to how reliable we can sort of look at this data right now. And I mean that more from the context that there's so many distortions because of the tariffs, the on again, off again nature of these tariffs. I mean, we've seen this show up in some of the consumer facing data, the idea that a lot of purchases were made kind of all at once that maybe would have been spread out over the course of the year. Maybe similar story when it comes to certain aspects of our labor market data. What does that sort of mean for the inflation data? Are we going to get a really accurate read of where inflation really and truly is?
It's going to be tough. One thing that we can say with certainty is that there's a lot of uncertainty about the data that's going to come in the coming months, be that inflation, as you pointed out, consumer spending, et cetera. But I guess one thing that we will learn as the data evolve is to see how these price pressures actually feed through, because, you've got a whole bunch of narratives out there. There are some who believe it could be a pretty rapid one-time price shock to a whole bunch of, goods, and then we could see that sort of rapidly evaporate in the subsequent months. Our own view is a bit more moderate in that we think it's going to be a couple of months where we see inflation remaining pretty elevated. It's going to be spread out, more so in the second half of the year, sort of a good 6 months where we see elevated core CPI readings. But like I said, it has to be wait and watch right now.
How much attention should we be paying to revision of data, specifically when it comes to things like CPI? Because as you mentioned, if we get a one-time shock and then you start to see it dissipate pretty quickly, I'm wondering how much of the net effect of everything shows up in revisions later on that the market doesn't tend to respond as much to.
So for the CPI, the revisions happen primarily just annually. So it happens with the January data every year. A lot of these revisions are not so much to the source data itself as much as it is to the seasonal adjustment factors. So the data are what they are. And at that point, usually the new piece of information for the market is of course, what the underlying trend is for the previous year. But I think the more valuable piece of information there, especially for those who forecast inflation, is what it means for trends in the upcoming year. But like I said, we've got to wait until early next year to see what the revisions look like.
And as Romain mentioned, at the end of the week, we get the University of Michigan sentiment reports, and this will be for June, so it'll be the first read on it. And of course, it was these surveys that really raised concerns about inflation expectations from consumers. Big increases for the 5 to 10 year outlook, the 1 year outlook in particular. But we have now since heard from the New York Fed that consumers' expectations for future price increases have been improving for most of May. How much of a market-moving report do you think this University of Michigan inflation expectation part of the report could be, given that we've had most of the deterioration in the soft data but not in the hard data?
Yeah, look, when it comes to consumer sentiment, University of Michigan has shown improvement for the May reading. There was already a tick down in the long-term inflation expectations measures for the month of May, and as you say, June, it's likely that we see a little more improvement. But we need to remember that the big piece of information in May was the de-escalation of U.S.-China trade tensions. So we think a lot of that has perhaps already been baked into that survey because it showed up in the May print. So I'd be curious to see see how much more of an improvement we see in June. Now, in terms of market moving, I want to say that the market has been discounting some of the University of Michigan inflation expectations measures, just because we've seen there's a pretty sharp partisan divide within that. But one thing that we've been saying at Barclays is, be that as it may, the survey is still representative of the average consumer out there. So any improvement in that survey is good news for the Fed.
Just real quickly, Pooja, do you think that we will get any real meaningful Fed action over the next couple of meetings?
Our baseline is unlikely that we see any meaningful action. Our own house rate call is for 125 basis points cut in December of this year, and that's basically because the Fed is going to be in a very, very tricky situation, right? On the one hand, we've got upside risks to inflation from the tariffs, which we think are likely to start feeding through in the next couple of months.
Yeah.
At the same time, these tariff uncertainties are not really good news for activity and investment spending or business sentiment per se. So there are signs of a slowing in real activity, or perhaps a moderation in consumer spending, and that could translate to slower payroll growth. So in that environment, we think wait and watch is likely to be the stand that the Fed takes.
All right, Pooja, I got to leave it there. Really appreciate you taking time. Pooja Sriram over at Barclays helps to lead their U.S. economics coverage as we push ahead to what we should expect over the next 24 hours that could move the market. That includes some pre-market earnings out of JM Smuckers, as well as small business sentiment. Scarlett?
Small business sentiment, as Pooja pointed out, May was the time when the U.S.-China relations kind of defrosted a little bit. So maybe we'll see a bump up there.
And then, of course, the bond auctions. We've been talking about that all week long. We get one at 1 p.m. tomorrow.
3-year auction is tomorrow, 10-year the following day, and the 30-year on Thursday.
And we do get some earnings after the bell. GameStop, GitLab, Stitch Fix, and Dave & Buster's. Who you got?
GameStop? Are they making profit?
I don't know, but they're going to report something. It'll probably be short. That does it for us here on The Close. We'll be back tomorrow. Balance of Power is up next.